Hey fam, it's Trader Stan. Today I'll be analyzing Bitcoin on the Coinbase chart. I'll be working from the 12 months going down to the daily, and hopefully we'll find some ranges. I'll be able to give you little bits and pieces of price predictions in terms of what I'm hoping to see and where I think we'll get some support and resistance. So to kick it off, the first thing I'm going to do is mark out my yearly open. It is the most important line at the moment, especially because we've been messing about so closely to it. The other thing that I'll mark out is previous all-time high, which is right there. And if we look just based on this yearly chart, we've taken out previous all-time high right there, then come back down. I'd say we're probably around close-ish to the mid-range between there and there. And we've got a little deviation there at the moment. Anything below here would be eating up liquidity or inefficiency from this last year's candle. And once we get a clean close above, we can say that price is about to move up. Other than that, you've got this basic market structure here, but yeah, it's a pretty neat yearly candle, so to speak. I'm going to go down to the quarterly now. And from here is where I like to start finding my range. So quarterly ranges to me are key ranges. Um, if I'm usually charting even for day trades, I'll always map out my quarterly range. Those areas where the lines come from the range is usually well respected and create a bit of resistance or havoc. So just marking that out top to bottom, and I'll show you why I picked this particular candle too. Probably should have done that at the start, but I haven't. So we'll keep going. So in terms of my ranges, I'll always mark at the top, bottom, and the 50% mark. If I'm going into like day trades and stuff, then if I'm marking the range, I'll literally break it into quarters. So I'll do the 25 and the 75 as well. But for this purpose, I want to really show you what a mid range does once price is in a range and how it reacts. So the reason why I picked this candle, and it'll be a lot more clearer now, in terms of my ranges, I like to pick one candle. So one candle where price is stuck. And when I say stuck, we have no closes above it and we have no closes below it for a significant period of time. So, in terms of this being a quarterly, we didn't break below until April of 2022. And, it started January 21. So, that's over a year we were stuck in this range. Once we close below, we deviate and then we start forming this bullish market structure. And what I mean by bullish market structure is basically a zigzag to the upside. So we go up, we come down, we go up, we come down, and so forth. You could say, yeah, I'd say that. And at the moment, the low being this candle. Um, with this bullish market structure, if this was to break, then we'd call it bearish market structure. So just to give you like an idea of what I mean, bullish market structure looks like this. We have this zigzag to this upside. And we'd say that's a higher high, and then that's a lower high, a higher high, a lower high, and so forth. When market structure breaks, what usually happens is instead of making a higher high, it'll just range for a while. So it starts ranging, and then you'll get a failure of making a higher high. So we'll come take it out. So we've taken, for example, this out right here, right? And then you get the zigzag, same thing to the downside. And then we start saying that's in terms of like the market's bullish or the market's bearish. Get rid of these. So if I was to do the same thing here, you see bullish market structure from here, right? So you've got this bullish market structure going there, and then we'll go sideways. So once we go sideways, now we're unable to take this out right there. So then we make a failure and then we get a bearish market structure like that. And then vice versa, we get a break of that and we start making higher highs, lower highs, higher highs, lower highs. So that's all the market really is. It's just a case of the bulls fighting to push the price up and the bears pushing the prices down. And in between that, you get just a battle between the bulls and the bears. No one's really winning, which is your sideways movement. Um, Other than that, the other thing I like to look at is how much inefficiency do we have and how do markets react to inefficiencies. So inefficiencies is the gap between two candles. If I was to I'll mark this out here. So at the moment, the largest inefficiency we got is right there. The previous inefficiency we had was right here. And you can see the market took a decent chunk out of it, right? Um, Another spot of inefficiency we had, and this is just purely going off the quarterly. I'm just showing you how inefficiency works. It was right there. And what the market does, if you think of the market or the candles as a snake, right? And I don't know if you remember the snake game on the old school Nokia phones, if you're from around my time. Um, Basically, you'd move the snake in maneuvers to eat the apple, and every time you ate the apple, the snake would grow. And what the market is if you think of these inefficiencies as the apple, so so basically the market goes up, comes down, and I'm just picking this inefficiency out here. It creates this inefficiency, right? Every time there's an inefficiency, the market's gonna be attracted to it and it'll eat that apple, so to speak. And if it doesn't do it straight away, it'll do it a little bit later. So then we create this deviation, and what do? We eat it out. From here, this point is gone, and then you can even see the consolidation is within that inefficiency. So an inefficiency itself can create a little range. But yeah, that's just a little bit of background on what an inefficiency is. And you can see even when we pushed up here, and as I was saying, this we wick down, it comes down, and it would take out most of that inefficiency. But that's why the market took a dip here. And it's little understandings like that where you can say, yeah, we took out this inefficiency, but we closed above the range. That's bullish. Bang. So you're already setting yourself up to take a trade on the next candle. And it's being able to pick out these little things which help you assume in which direction price is going to go, and you take your trade. So if I was like a major swing trader, for example, and I'll be honest with you, I don't trade off the quarterly. I just pick ranges off the quarterly. But if you were to take a trade off this quarterly, this candle here tells you the whole story because we wick into this inefficiency, close above range. We have a retest. So basically, the next candle open here, right? We retest, and the market's bullish enough to not even have to retest this line of this inefficiency here. And then it just shoots right up. So if you wanted to be a super safe trader, for example, you'd mark this out so that you can't go wrong, right? Because that's previous all-time high at this stage. And you just wait for that break above and it holds, bang, you can trade it towards the upside. Anyway, going back to this quarterly chart, I'm going to now go down to the monthly and we'll look at this in a bit more detail. Oh, actually, I'm going to go back to the quarterly because I forgot to mention one thing. The other thing I want to say is that the body of the candle is all institutions. The wicks of the candles is retail. And what do I mean by that? So, if you look at this candle, for example, and I'd say this is the point where institutions really started stepping in, and we didn't have an ETF at this point, right? ETF was around these two candles here. That's when the ETF got approved, roughly. But at this point, people are saying, "Oh, but there was no institutions." No, there were big buys. If I was to say a micro strategy, that's still to an extent institutional money. That's not me and you buying it. This is MicroStrategy. They're huge, right? Three Arrows Capital, still institutions, even if it's just within the crypto sector. I mean, now we have ETFs. That's another level of institutional money, but this is still institutions, right? And they're the ones that decide where we're going to open and close. That's why I say that the body of the candles institution and the wicks are retail, because the wicks, you can push price up as much as you want in terms of retail money buying. We can push it up to here, right? But if the institutions decide, no, we're going to close back within range, back within close to the mid range, bang, they'll shoot you down and they'll close it here. They're the ones that decide, not me with my $50. So if you look at this candle, bang, institutions push it up and then institutions push it up again. We then eat liquidity all back down from this candle here, but we close within range. So 2 bullish candles, 1 down candle. I'm guessing there's an order block around here in lower time frame, which this bounced off, and a lot of people would have had their buy orders in, which is why the market then pushes up. We don't even get to retest it at this stage. You can see these 2 candles have a gap towards the downside, but we took liquidity from the upside. So at this point, so to speak, the market would have been ridiculously bullish because we're above quarterly range, like bang, this is going to go up, and the market dumps on them, takes all the liquidity from the downside, and then we push and then stay within the bottom half of the range, right? The first 50% of this quarterly range. So the next candle then starts pretty close to, it opens pretty close to the mid range, and we take all the liquidity from the upside. So at this point, liquidity is taken mostly from the downside here, and then we take all the liquidity. Remember, we didn't touch here, right? We didn't touch the bottom. So there's still a little bit of liquidity sitting here. And obviously all of this here too. That's all inefficiency here. Once we take the liquidity from the upside, institutions are pushing price back down, and that is super bearish because there's nothing left up here. If we're to go back up here, it's price discovery at this point. And a wick like that, you could say, is a doji candle. And I know this candle here is the same, right? It's followed by a doji candle, but we never really reclaimed the mid-range here. Had we reclaimed the mid-range, price would go back up and at least test this area, right? Because it's a range-bound environment. So from here, you can see we don't even reclaim the previous quarter's high. We just shoot right back down. We take all the liquidity from here. And in terms of inefficiencies, we take out a lot of the inefficiency here. And remember, I was saying it's like the apple, right? There's an apple sitting here, and this is the snake. So at some point, it's going to come back and eat the apple. It just doesn't do the whole thing. But if you ask why, it's because we retested previous all-time high. So we retest previous all-time high, which is pretty much the key breakout, and then we even deviate to it. So we do a deviation, then this candle closes us back up within range. From this point, if you notice one thing, we have a pattern forming. So we have, in terms of the quarterly, we have 2 up candles, 1 down candle, 2 up candles, 1 down candle, until we get to here. We don't know what this is. This hasn't closed yet. I'm hoping it's a bullish candle because I'd like to see a positive quarter. That way I can make some money. But there's a chance that maybe it's not. Maybe we close just below yearly open and this pattern continues, and then we can expect another 2 positive candles followed by a negative candle. It's too early to say though. Well, I don't know. We just have to see how price reacts. And in terms of, there is more liquidity to the downside than the upside. Doesn't mean we're gonna come and eat out the liquidity right now. I mean, we haven't touched the liquidity from here either. There's no reason to at this stage. Market's bullish, right? So in terms of the quarterly range, that's pretty much all I've got at the moment. Going down to the monthly, let's see how we're looking here. So with the monthly, I'm going to point out one area, and it's an area that messed with me a lot because up to this point, I'd never seen price react in this manner. And it's this area here. That right there done my head in. And the reason for that is because this year was pretty much an ETF push. And when the big boys came into play, they created a price action that I hadn't seen up to that point. If you go back on Bitcoin, price action is very simple. We go up, we go down. There's really there's not a whole heap of messing around. The ranges were very simple as well. If you look at that, look how respectfully that holds. If I do this downtrend, look how respectfully that is so respectful. It's a bunch of good students in class doing good things. And as it gets older and it starts forming, it picks up a bit of attitude, just like humans, and it starts doing things that are out of character, which for a trader makes it really hard to play. So with this consolidation, the reason why I struggled with it a fair bit is because looking at the monthly, it's quite simple, right? It deviates. But in terms of picking a range in this, and I'll show you what I mean. This was March's range from 2024. I'm going to change it to a yellow because that's my monthly color. If you look at that, we never close below that range. You could say slightly, and I mean very slightly here. We closed below very tiny close, but in terms, most of the time, the body of the candle was stuck right there. From range high to low, the body of the candles was stuck right there. But the wicks on these candles were huge. If you look at that, like that's a whole deviation of wicks. And the reason for that is because retail's scared, right? So retail selling, retail selling, retail selling, retail selling. And these institutions just kept buying it up. And they're giving us their hand right there because they're closing within range the whole time, saying, hey guys, we're going to push price up. We're closing within range. But no, retail selling, retail selling, retail selling. And a lot of it would be just short trades and stuff like that too, right? Doesn't mean everyone's selling. So we have this, I'd say, like, I don't know what to call it. Would you call this consolidation? Would you call this accumulation? I'm not too sure. But it's above range high, right? So in terms of the previous bull run's range, that quarterly range, we're doing this at range high. And I remember a lot of people were scared at this time. A lot of people were saying, oh, bull run's not going to come, this, that, this, that. I mean, same thing as what people are doing with the altcoin market now, right? It's like, oh, why isn't the altcoin run here? In terms of altcoins, we're kind of like roughly around there. But the market's getting more mature. It's trickier to play, and the trickiness is basically a test of your patience. At the same time, a lot of people look out for these inefficiencies, and all it is that there's set buy orders right at the bottom because people are expecting it to get taken out, especially when you get price action like that. They expect it to get taken out. So there's buy orders, and look, it pushes it straight up right into range, and then bang, we're gone. Anyway, enough of that. Another thing I want to point out is it's easy to read this, right? Prices within a range. What do we do once price is here? You can't say that's a range. You could say that's a range. That's a range right there. So this one candle, this monthly for December, and I'll actually chart this out soon. I've actually charted the top already. Good on you, Stan. Right there. So we'll chart this out soon. This is where price is stuck. Actually, you know what? We'll do it right now. So price at the moment is stuck within December's range. It's the one candle that I've picked, and we haven't had a close above or a close below. So for now, and personally, that's the range I've been trading. While everyone's thinking the world's over and this, that, in terms of Bitcoin, that is, all price has really done is it's taken out December's high, it's taken out December's low, it's retested December's low, and now we're kind of stuck within, I'd say, maybe like the 618. I don't know. Let's have a look. Is it the 618? Also, in terms of ranges, yeah, like the quarterly and all of that plays. Sorry, in terms of ranges, the 0 to 100% definitely works. A key area for traders is always this 61.8 though. There's, for some reason, you know what it is? It's greediness. So rather than everything happening at the 50% mark, let's push it that little bit more and make that little bit more money in the 61.8. And vice versa, right? When price is coming down, a lot of the times it will retest 61.8 on the downside. And it's just because traders want that little bit more. But anyway, if we look at this range here, two things to notice. One, price is stuck between there. Two, you have this massive inefficiency gap. So if we were to lose December's low, and then I'd be looking at this as support, right? I'll show you what I mean. If we were to lose December's low, and I see something like that, a retest, and we lose it, I'd be playing it down to here to eat out all that inefficiency on this side. And it's just the same thing we did there. So right there, oops, I'll just highlight this. So right there, we ate out that inefficiency there, yeah, through this downside channel. So is the market going to do that? Is it just going to range and do it? Does this start grinding a range towards the downside? I'm not too sure. Honestly, I don't think so though, because this is that bullish year. We do have Trump in power. He is doing some amazing things for us. Everyday news is quite bullish. It's just that we haven't had the price action to match this. But having said that, if you look at gold, for example, yeah, gold's been reacting. Gold's been very positive. The stock market, S&P 500, it's looking fantastic. The Dixie, the US dollar, it looks like it's going to start breaking down, which is what we want for risk assets to move up. And if you take all those factors in, I don't see us messing around for too much longer. It can to a certain amount of time, but then the market's going to start pushing up. From here, what I'm going to do is I'm going to go down to the weekly and we'll look at this in a bit more detail. Before I do, though, there's another thing that I like to do in terms of ranges. A lot of the times when you get a really strong range, for example, this quarterly range that we marked out, there's a continuation of that range. So from here, I'll go to the 150%, for example. Oh, sorry, that's the 125, which is here. The 150%. I'm going to mark this out. Orange, and then finally the 200, which is right here. Already I can see the 200% being respected. Just going to tidy this out in terms of line everything nicely. Everything's color coordinated. So straight away I can see that this is a quarterly range, that's an extension. So the next level of the quarterly range, I know that's a monthly range, that's the December range, my yearly open, and this is just the low of this. I'm going to take this out for now because I want to see that deviation and how it works around there. But we'll go down to the weekly just to see this in a bit more depth. Going down to the weekly now, this definitely stands out. I'm not going to lie, this inefficiency stands out right there. And especially because the last portion of inefficiency, so if we portionize it, right? So that's one portion, and so forth. The first portion we didn't take out, which is here, yeah? So there's inefficiency all along there. The second one we did. Do we on the third one or not? I'm not too sure. But like I was saying, my first plan off the bat, if we lose December's low, I'll be looking short around here. Just to begin with, just there. I'm happy with that profit. And the other thing is there's a flat body candle right there. So there's no wick. And generally we do take out flat body candles. But having said that, we don't have to do that right now. The market can do this, right? The market could go back up to range high. We break above December, we go do a bull run. And then on the way back down, we could take that out. And that inefficiency, for example. And maybe that's a plan for the bear market. I don't know. We just got to see how price reacts. The other thing I'm noticing is that there's a lot of action at this yearly open. So a lot of people have their order buys at yearly open when price comes down. And you can tell that by these wicks, right? Because these wicks are long towards the yearly open. And there's a lot of them too, which means generally there's a lot of support around here between December's low and the yearly open, that is. There's a lot of support around there. That's positive to see. There's no real order block. You could say that's an order block right here. So it's the last up candle before the market's gone down since. Just going to change the color to a light blue, which is the color for my order blocks. Right there. And if we were to reclaim this, so I'll draw it out so it's a bit clearer. If we were to then reclaim this like that and we start showing bullish market structure, you could go for a long and at least play it from this portion to range high. Leave a little bit open, bring your stop loss to break even and see how you go. See whether you get that or not. If you get that, damn, like that is a solid trade and you'll make some solid money. But personally, if I was to take the trade, you'd have to wait for some sort of bullish market structure to form in the lower time frames. I'm going to leave all of this data behind. I'm just going to focus on here for now because that's where price is trapped. I'll get rid of this order block and we'll go down to the daily now, which is the lowest time frame I'll go for here. I'm not going to do any day trades live or anything like that. I mean, by the time you watch this, it's not going to be live anyway. But day trades have been pretty slack on Bitcoin. I've been trading a lot more gold and I caught a nice one on ETH too, actually. So if I go down to the daily, really it's just a crap load of choppiness, like a crap load of choppiness. You could say this was like the extreme down candle that we had. And if you use that as an order block, the top of that is range high anyway. And range high has been holding support quite strongly. In terms of what's holding the market, so if I was to plan out a short, for example, this is the order block that I would want to see us lose. That's if I'm playing the shorts, yeah? So if I'm playing from one portion of my quarterly range, so from here to here, if I was to play this portion here, right there, I'd be looking to lose this. I'd be looking to lose that right there. And then obviously you'd start your market structures, yeah? So top, bottom, top to bottom. And then do we continue this? Do we continue this to the downside? Do we take out this order block and then come down like that? Could. That's a scenario. In terms of the bullish scenario, the other thing too is if we did something like that and price came and held support and we start a bullish market structure, something like this, back above the yearly open, yeah, I'd take a long. I'd take a long stop loss there and long it back to range high and then leave a bit open to see if we can go above. That's really is the two scenarios though from this point forward. From this point going on, I'd say what I'm looking at is if we're gonna lose price from this December's range, the first place I'd see support is this order block, and then second is this mid range. But for us to go into the mid range, if I just look at this quarterly range, for example, right, and I'll zoom out for a bit here, for us, and a lot of people will think, oh yeah, we're starting to topple and we're going to take liquidity from the downside. You can't always say because the same thing people were saying here. They're saying, oh, we're going to topple and take liquidity from the downside and come back. It didn't even come back into range to the mid range on this portion of the quarterly. And it looked like it big time. If you look at that, like at this point, everyone was convinced this was going to come back to the mid range. But the market's bullish. And at the same time, I think the market is still bullish. We might not come down to here. But if we did, this is an area that I'd expect us to hold and hold quite strongly too. So I'll give you three scenarios on how I think price will play out. And to be honest, I don't know. This is the three scenarios that I'll look out for though. One is that we lose December's low and we come into this order block, possibly down to here, right? That's one scenario. But having said that, from here, I'd be looking at like extreme bullishness. So run it back up. Two, the second scenario, and at the moment, I'm just playing off this downtrend that we got at the moment, yeah? But at the same time, we've got liquidity sitting there, both haven't been taken out. So this is just one of the possibilities in the realm of everything. Another one could be something like that, which I mentioned before. Possibility. Another one is something like this. this holds and this holds possibly, right? Even if this gets taken out, something like this. So we retest the yearly open and we break this market structure. For me to go bullish, as long as we break this market structure, I'm happy to go. Like I'll take the punt and take the longs because just because of the time of the year it is, um, I still think we're going to have a bullish quarter. So if we broke this trend in terms of my longs, this is what I'm looking for, a break of that trend. If we break this trend and we start showing bullish market structure, yeah, I'm taking the long. So something like this. Reclaim of that. Once we reclaim this, take out that high, and we're good to go. So plans on both. My final chart would look something like this. That for the downside. The downside should really be red. A bit more scarier. And for the upside, I'd be looking at something like this. There we go. So my two Bitcoin scenarios are right there. The only other thing I do is mark out this order block here, which has capped the market. And I'll get rid of this trend line. There we go. My final Bitcoin on how I'm seeing things. Now, in terms of price prediction and to the down, because obviously the downside, you've got your levels, right? So you know where to go. But in terms of going to the upside, how could you get some price predictions in terms of going to the upside? You know how people will say, I think Bitcoin's going to this, or I think Bitcoin's going to that. Well, all you really got to do is get your fib, put your levels in right there, and then see where things end up. So your 200 is sitting at 130K. Your 300 is sitting at 160K. Your 4 level is sitting at 200K. How much steam is in the market? No one really knows. It all depends on when the whales say, all right, that's enough, guys. I've had enough of you guys. So if I zoom out like this, let's just go back, just going to the 3-day just to condense the chart a little bit. And you can see like the market structure is clear as daylight in terms of to the upside. You've got these massive swings like that, right? And that is bullish as hell, right? So we've come down to about there, yeah? Continuation would look basically like that, down to the 150% mark again. And if you look at gold, gold's doing exactly this right now and doesn't give you signs of stopping. So BTC could do the same thing. In terms of how much, that's anyone's guess. No one knows how many of these we're going to do. But if you if you put your levels in and you just play this thing level to level, and especially on like a 50% to a 50%, other than this 50% here, every level's been respected. There, there, there. This one was just a straight shooter, bang, there. So if you play this stuff level to level, it's really not that difficult. Where it gets difficult is, yeah, if you're day trading, there's intricate moves there. But in terms of long swing plays, it's really not that difficult. It's just a matter of catching them in time. And obviously, like if you're trading, lowering your leverage or just trading it in spots. If you're trading in spots, you kind of can't go wrong, right? But if you're trading and especially if you're starting out, just lower your leverage and allow yourself some room to move. Have a point of invalidation. So, example, you see market breaking here and it's going to the downside, yeah, cut your trade, take the short, but have your levels of invalidation in place. And other than that, that's all I've got to say. So happy trading, guys. I hope this video helps. I hope this gives you some ideas on and some structure towards how you're looking at the market and ideas on how you can chart things yourself, especially if you're starting out. The longer you do it, the better you get at it. Thank you for watching, guys. I appreciate your support.